Good afternoon, everybody. Thank you so much for joining us today. My name is Sarah Owsley. I'm the Advocacy Director here at Empower Missouri. We're going to probably give folks just 30 more seconds to see who all else might like to join us. Today, we're going to talk about community land trusts and community land banks and how they can play together well, and the needs of a community land trust with a presentation on a successful one working here in the Kansas City area. So we are very excited about that as we sort of let folks in. The big voice from above did tell you as you joined that we are recording today. We do post these online. So if you have your camera on, remember that will be posted online. We'll also ask you to make sure that if you're not speaking, that you are muted. You will have an opportunity if you would like to ask questions with your voice. We would absolutely invite you to do that at the end of the presentation. But between now and then, we'll ask you to stay muted if you're not speaking. That would be phenomenal. Perfect. Here's our agenda today. This is your general welcome and housekeeping and how we Zoom, even though we've all lived on Zoom for a number of years now. It always still feels important to every organizer to remind you of things as we get started. So we'll do that. In just a moment, we're going to hop into our networking breakout rooms. As a reminder, we've been doing this as part of our Friday forums. When our forums were in person in Kansas City and St. Louis, one of the things that people really loved about them was an opportunity to connect with folks who cared about the same kinds of issues that you all cared about, right? Network, make new friends, new connections, etc. We want to continue that, even though we are going to stay in a virtual format for our forums moving forward. So I'm going to put you in just a minute here into a breakout room. There'll be a box that pops up on your screen. You can join a room with 3, 4, 5 other folks that are with us today. I'm going to put you there for 5 minutes, and then we'll bring you back and begin our presentation. All right, excellent. Thank you all for coming back. Hopefully that was a good opportunity. Please also put your name, your organization, where you are, any other information that you want to in the chat box. We'll utilize that throughout the presentation. You can put questions in there. I will make sure that Meghan sees them towards the end, and we'll navigate some question and answer opportunities. We will have a brief survey for you before you go, and we'll talk a little bit more about how you can be connected to Empower Missouri and the work that we do. With that, I'm going to turn it over to Meghan. I'm very excited. I got a little glimpse into what she's going to talk about, and I think it's great. I am a person who just really believes passionately in the usefulness of community land trusts and what they can do, how they can ensure long-term affordable housing and housing stability, and just the benefits of what homeownership looks like. So we're really excited to have this today. I'm going to stop sharing my screen so that Meghan can share hers. She's the executive director at the Marlborough Community Land Trust. We were chatting before you all joined us a little bit about our experiences in the for-profit world before we got there. And I am excited to have her share with you a little bit about her passion and the need for expanded affordable housing availability here in Kansas City and across the state, and how land trusts and land banks can be one part of that. So Meghan, we saw your slides for a minute, and now it's just your blue swirly desktop. There we go. Hey, we're perfect. Great.
All right. I was just bringing it back.
Yeah, I'm going to turn it over to you, Meghan. Thanks so much.
Wait, where am I? Welcome you all. Thank you so much for being with us and just being here to learn a little bit about community land trusts. I've actually only been working in the community land trust space for about a year, but I'm very, very passionate about it. And when Sarah said, well, how long do you need? I'm like, I could talk about land banks all day long. So I'm not going to do that to you, but I will share just as much as I can in a quick nutshell. I recognize that throughout the audience, there are some of us who know more about land banks, or excuse me, community land trusts, and some who know less. So this is a very basic presentation. Again, as Sarah mentioned, please feel free to ask questions. I usually just start by saying, what are community land trusts? And it's a shared equity, in our case, home ownership, that acquires and owns real estate property in perpetuity. As Sarah mentioned, that's one of the most important things about a community land trust. in order to pursue some specific community focused goal. And our goal is affordable housing and ownership. So it's dual owned property. The land is owned by the community land trust and the home is owned by the buyer. And that buyer is typically earning below the area median income. Really, CLTs are a controlled response to real estate that has been very, very, very focused on profit and which has often excluded low income buyers. So one of the things that I think is super cool about community land trusts is that they have been in existence a long time. They actually started in a response to the civil rights movement back in the 1960s and were really driven in the rural areas first. It was really focused on trying to provide an opportunity for African-American farmers to have land ownership. As the organization continued to evolve in the early 1980s, it was identified as a way that it could move into the urban space and to help prevent gentrification and displacement. So today there are 260 community land trusts in the United States. The Marlborough Community Land Trust is the first land trust in Kansas City, Missouri. So there are several in and around us, but Kansas City, Missouri did not have a land bank, or excuse me, a land trust until we started business in 2019. So one of the ways I like to talk about land trusts is really what's good about it. What are the benefits of a community land trust? And so this just kind of gives you a little bit of a paintbrush, and we'll look at each one of these separately. All right, so increase access to home ownership and safe rentals. So over the past couple of decades, access to home ownership is more difficult for all Americans. Really, since the challenging home ownership market in 2008, it has been even more difficult for individuals who are not earning top dollar to get into the home ownership space. And then typically in turbulent markets, this is no surprise to you all, families that are younger, lower income, people of color have particular difficulties getting into the home ownership opportunity. So a shared equity home ownership program is a unique, different model. It seeks to make the homes affordable to lower income families, basically by investing some public resource to reduce the initial price of the property. And then they keep the price affordable for all future home buyers by instituting resale restrictions. So we'll walk through how that happens. The increase in the personal and community wealth. Interesting. Home equity, housing equity makes up about 2/3 of all wealth for typical households. So though, you can, lots of different ways that people talk about how do you build generational wealth and, entrepreneurship for sure, but home ownership is really a big major driver. This next statistic just absolutely floors me. So the Federal Reserve Bank did a study in 2017. The average median net worth of a homeowner was $231,000 compared to the average median net worth of a renter being $5,000. That is the difference that home ownership makes. We also recognize that a lot of government and banking policies have prevented individuals in the BIPOC community from acquiring homes and have continued to reinforce that racial wealth gap. And you can see a little bit of that example in that graphic on your right, where you see the difference between white and black median and average wealth. So it stabilizes households and communities. The first statistic there talks about how often people move. So the average annual move rate of someone who owns a shared equity property is 2.6%. For someone who's in the general market, it's 14%. So that can tell you that the people who are in a shared equity model are moving less frequently, and that does tend to help stabilize that community. They don't have to stay in that same house. There are opportunities for individuals who are in a shared equity home ownership model to move on to a market share model, but it tends to just show that research shows that people stay in their shared equity home model longer. And secure housing is really paramount to physical and mental health, educational opportunities, employment options, investment in the neighborhood, safety of the neighborhood. Anecdotally, I worked when I finished my time in the for-profit world and went to work for a nonprofit. I started at the Prosperity Center, which is actually housed at Rutgers University. And the Prosperity Center is funded by LISC, and we offered two services: career coaching and financial coaching. And typically our clientele were individuals who were in the community who were low or moderate income. And so one of the things that I learned while working with individuals trying to help them get sustainable living wage jobs was that there was a real sense of a lack of self-confidence that they attributed to not having a stable home life, not feeling like they were a welcome part of a community, not feeling like they had that solid background. So that to me is what kind of spurred my interest in moving back into the housing space, thinking if we can really impact the housing space, that we have a lot better chance of impacting and creating employable individuals. Stabilizes households and communities. So the two figures that you see here is the red is community land trust homes. The blue is market rate homes. So even in the very, very challenging years of 2008 through 2010, there were very, very few foreclosures of individuals who are living in a community land trust home. Typically, it's less than 0.5%. We'll talk a little bit more about that later, but it really does bring some stabilization to those households and communities. Okay, I recognize it's a little difficult for you to see, but I'll just kind of give you the basic gist of what these two graphics are trying to show you. So the one on the left, that green bar, shows you how many homeowners can be helped with a conventional subsidy program, something like a first-time home buyer grant or loan. So if there was a little over $2 million, $2,172,000 invested, it could help 152 homeowners using those conventional subsidies. However, if you were to invest that in the community land trust model, you could help 357 homeowners. And that is because of that perpetual affordability, which we will walk through how that happens. But it just gives you an idea of really those home loan grants or first-time homebuyer grants are a one and done situation. People get that grant, they use it, and then they sell their house and basically gain, whatever the market rate has increased. The shared equity model, the community land trust model, reuses that subsidy over and over again. So the graphic on the right just basically restates that, and it says, okay, if you wanted to help 357,000 for 350 households, it would take $2,172,000 to do that in a community land trust model. To help the same number of households in a conventional subsidy program like first-time grants, homebuyer grants, it would take $10,584,000. So here's another piece of the community land trust that I think is extremely beneficial, and then it's really about community control. They are called community land trusts, and it's really because the community is the driver. So the land trust is governed by a board. That board is a tripartite board, so it's made up of 3 parts, and it should be split equally whenever possible. So 1/3 of the board are people who own community land trust homes. 1/3 are neighbors in the area that the community land trust is operating. And then 1/3 can be kind of outside experts. So anyone who has expertise in affordable housing. So in our case, we have a 12-person board. Right now, we only have 3 community land trust homeowners. So we use more neighborhood residents until we get more land trust homeowners. But again, the meat or the reason behind that is that means that the community land trust homeowners and the neighbors have 2/3 of the votes in that board, and those outside experts have 1/3 vote. So the community is really able to drive the decisions that happen in that community. One of the other things that I find very helpful about the community land trust is that it really provides a financial backstop to those buyers. And that's the reason for the very low foreclosure rate. So we offer what we call post-purchase stewardship. So once an individual becomes a community land trust homeowner, we're basically standing behind that homeowner and we're walking through with them the whole time they own one of the community land trust homes. For example, because it is a shared equity model, let's say our homeowner is late on a mortgage payment and he receives a notice. Well, because we own the land, we receive the notice also. And now we have the opportunity to communicate with the homeowner and say, hey, what's going on? And, we hear lots of different stories. Well, I lost my job. I have a new one, but it's 2 weeks, before I get my first paycheck and I couldn't make the payment. So then the community land trust is able to say, well, here's a place you might be able to get a small dollar loan. Here's a way that we could skip this mortgage payment and tack it on to the end of your mortgage. So the community land trust goal is to keep that individual in that home. The last kind of backdrop is that the community land trust has the right of first refusal on that property. So let's say that a buyer gets into a situation and realizes that they are not going to be able to make the mortgage payment on an ongoing basis. The community land trust can then purchase that home back from the buyer, and the buyer goes on their way without a foreclosure on their record. So we are working together with that buyer, again, the whole time they're in a community land trust home. So who are typical community land trust buyers? It's interesting because a lot of people have kind of some preconceived notions about who is going to be moving into that community land trust home. Many of our buyers are working individuals who are serving their community and are not making enough money to be able to afford to purchase a home in their community. So it's nurses, it's teachers, it's emergency response individuals, people who are construction workers. I mean, on and on and on and on. They make good money. they just can't get into when the price of a new house is so high, they just can't get in. So that is a lot of how we are trying to support them, is that subsidy that we give them as they're getting into the house. They have to have a job. They have to be able to qualify for a mortgage. And we do work with specific financial institutions that have said, okay, we understand this community land trust process. It's a little bit different than a traditional market sale, but we will offer loans for your buyers. So the buyer is often interested, ready, maybe shopping, looking for a place, but isn't able to find anything of good quality in their price range. And so this is typically the calls that I get of like, oh my gosh, I've been looking since July of last year. Everything that I'm looking at, well, I can't afford, or I have an FHA loan and somebody comes in and buys it with cash. Just many barriers that they're experiencing trying to get into a house. We do have some parameters that buyer has to be willing to complete an MCLT application. They are required to do home buyer education class so that we know that they are comfortable with, yes, I really do want to get into home ownership. And then they do an orientation to what is a community land trust. Again, to be sure that we're not just like telling them, oh, this is the greatest thing ever. We want people to really understand what they're signing up for. So here's kind of the beginning of the home ownership process. I'm breaking it down just a little because I generally have one slide that I show and people are like, whoa, that's a lot. So I'm going to ease into it. Most community land trusts are tax exempt nonprofit organizations, and they are organized in order to acquire property in order to create affordable homes. So we either are renovating a home or building a new home, and then we are selling that home at a subsidized price to someone who is income eligible. And we retain the title to the land. The buyers, we have a pool of buyers that have expressed interest. If there are multiple buyers that qualify for a home, it does get into the opportunity for the board of directors, remember, controlled by the neighbors, to make a decision about which buyer to put into the house. So they get board approval, they get the deed to the house. They agree to a 99-year ground lease. So I get a lot of questions about that. What is this ground lease? I will tell you a little bit more about that. But 99 years is very specific to basically ensure our buyers that this is not a deal that's going to come and then go. We're not going to come back in 5 years and say, oh, no, this isn't it anymore. We're taking the house back. You have that house, you have the access to that house, you receive the deed to that house for 99 years, which basically is saying your life. If the house gets handed down to someone else, or if it gets sold to someone else, the ground lease starts over. So it's a new 99-year lease. They use the land as their own. In our case, they do pay the real estate taxes. Although the community that we're operating in right now in Marlborough, we have created an urban renewal area, so the taxes are abated for 10 years. So the person purchases the house, they're living there. The real difference between a market rate house and a community land trust house occurs when that buyer is ready to sell, because the buyer has agreed to a resale formula. Basically, how much are we going to be able to take away from this house when we sell and move on to our next home? So there are multiple different types of resale formulas. Marlborough Community Land Trust uses an appraisal-based resale formula. So if I walk through this example, let's say there's a family of 3, they have an income of $40,000 a year, and they qualify and apply for a community land trust home. We're going to have the home appraised and see what the value of the house is. So it's now been rehabbed or it's been built, and the market is going to say this house is worth $100,000. We are going to sell it to that community land trust buyer for 20% below that market price. So in this example here, $80,000. So they're getting a $20,000 subsidy, $20,000 off the price of the house in order to help them get into the house. The beautiful thing about that 20% is that the banks look at that as 20% equity. And so it often eliminates private mortgage insurance, often helps the buyer get a better interest rate because the bank looks at them as having equity. So when that buyer is ready to sell, we're going to get the property appraised again. So let's say they've lived there 7 years. And I use 7 just because that happens to be the average amount of time that a community land trust homeowner lives in their community land trust home. Mostly probably because we do a lot of first-time home buyer homes. 3-bedroom, 1 bath, 2-bedroom, 1 bath, 3-bedroom, 1.5 bath. And so typically people move because they've outgrown their space. Okay, it's 7 years later, the house now appraises for $150,000. So remember when we sold it, it appraised at 100. So the difference between those two appraised values is $50,000. That homeowner is going to get 25% of that market increase. Now they're getting back their equity. So just like a traditional market rate sale, if they've put down a down payment, they're getting that back. If they've retired principal, they're getting that back. In addition, they're getting a portion of that increased equity. So frequently what people say is, well, what happens to the other 75% of the increase in market value? It stays with the property to keep the price of the property low for the next buyer. So in this case, our buyers invested $80,000. They're going to get $12,500 for their share. So they're walking away with $92,500 minus whatever they paid in interest. Now the price of the house will be what we sold it to the first buyer for, $80,000, plus what we gave to that first buyer in appreciation, $12,500. The house now sells for $92,500, allowing another individual who's low or moderate income to come into that home and afford it. So instead of being $150,000, which is what the market says it would bear, it's sold for $92,500. And that's how that repeatable subsidy continues to occur. This often brings lots of questions. So who is thinking, what is she talking about? Feel free to unmute if you've got a question.
Megan, there was a question in the chat box about the tax abatement.
Sure.
Because property taxes go towards community services like fire and schools and things like that.
Yes.
We're just like sort of curious about that tax abatement and what that looks like.
So I'm sure I'm not telling you all any secrets. Many developers are getting tax abatements, and they're getting significantly longer tax abatements than you can get in an urban renewal area. So basically what we're trying to do is give our homeowner a fair shot. It allows them to begin, ideally start saving towards those taxes, because when the 10 years are over, that tax is going to whatever the tax is now for that appraised value of that house. So it does reduce the taxes that are coming into that area for that 10-year period, but the individual is contributing in other ways, like they are paying their utilities, they're shopping in the grocery stores, they're going to the coffee shops. So the community feels like it's a good trade-off, as opposed to having a vacant home or a derelict house And the tax abatement is not the case in every community. That was just something that we particularly wanted to work on to try again to give our individual buyer the same bonus that a lot of for-profit developers are getting.
Yeah, I think, Megan, that's a really important part, right? That like that property wouldn't be collecting property taxes as an abandoned property anyway, right? And so it's
Exactly.
not really taking something out, it's adding a family who has a lower housing cost and then more financial freedom associated with that, the ability for more flexibility. They're making decisions for themselves. Like for that individual family, they are more invested community members and have more resources freed up to do that. So it's not like you're taking the taxes away from a property. Really, we're like adding a family who's spending other types of money in the community to support those services, and sort of like leaving what would have been developed or what would have been collected on that property the same for a period of time. You are absolutely right that happens to huge developers all the time. In Kansas City, we can certainly talk about multi-million-dollar developments with hundreds of families that are not paying any property taxes into the system at all, and the disproportionate impact that those big developments have versus single-family homes or even like small four-family multi-units, et cetera. And so it's just sort of a focus shift from like that family is like getting something extra instead of like we're enabling them to be more full community members. And the amount of property taxes on an individual property compared to some of the very large developments is a tiny, tiny drop in the bucket for Jackson County. It just frankly is, right? The couple of $1,000s every year that those families might be saving is just like not influential enough. And so it's just sort of a shift away from thinking that sort of way. These are really like, there's lots of evidence that shows that it's also revitalizing to the community around them, right? When you take these homes and you flip them back into community use. And so the property taxes in the community around them also raise slightly, not significantly. There's lots of evidence, I'm sure Megan's going to talk about how it has like actually a stabilizing effect in communities around them. And so there are lots of reasons why those temporary abatements in certain areas for targeted households is actually really beneficial for our community.
Absolutely. And in Missouri, the tax policy is that the land and the home are taxed together. Kansas allows the two pieces to be taxed separately. And that's helpful because that allows the property tax on the home to be kept at the level based on the resale formula. So that individual taxpayer should not be paying taxes on a higher value than what they're going to be allowed to sell that house for. So that's an ideal policy change that we'd love to see in Missouri, a separation of the land and house tax and the ability to manage how high that property tax rate is based on the restricted resale. Okay, well, how do we qualify for one of these homes? We use the HUD guidelines, and you might be wondering why here we are in April, and it is still showing the HUD 2022 income limits. HUD is not bringing out their 2023 values until sometime in May. So when those values come out, we will change to using those. Generally, they go up every year. And again, I think this is really helpful to look at because you can see if you're a family of 4, you can earn $77,450 and still qualify for community land trust home. So you're not poor, you are just struggling to be able to get into the home ownership market. The individual who purchased our second home is a mom of a family of 5. She makes $60,000 a year, but she still could not afford to buy a home. So she qualified under the income guidelines and was able to buy a community land trust home. I mentioned the ground lease. So the ground lease is the document that governs the relationship between the land trust and the homeowner. It is a lengthy legal document. It basically covers everything, like what the individual can do with the home, what the land trust can do with the home. And it's all laid out so that there is not any question of like, oh, well, I thought that was allowed. Because it is an intense legal document, in the Marlborough Community Land Trust purchase process, we require that our buyers sit down with an attorney and review this document to ensure that they understand what they are getting into, what they're giving up, what they're gaining. And we ask the attorney and the buyer to both sign this document. The reason for that is that we would not want a situation where somebody was like, oh, well, I didn't know that I agreed to that. If an individual can't afford an attorney, we do have a relationship with legal aid and we can direct them to that source as well. How does the Community Land Trust get funds for our property acquisition? So one of the primary tools that we have used is the Abandoned Property Act. In that case, we are filing a lawsuit if we locate houses that have several years of back unpaid taxes and code violations. Typically, that alerts us to the fact that the house is basically abandoned. We then try to go to court and prove basically that no one has been living in the home and that we would like to take the home and rehab it to make it a viable living space for a family or an individual. That's one source. We also get lots from the land bank, which we'll talk about in a little bit more. We purchase those lots. Typically, the prices are relatively low, somewhere $3,000, $4,000. And then we are building a new home. We also can get funds through some federal and state grants, CDBG, home funds, HUD funds. We can also self-finance. So sometimes we will actually, if we are able to purchase the property because it has a clean title, we can purchase it. We can take a lien against it for a line of credit to do the rehab. Then when we sell the house, we pay off the line of credit. We're also constantly raising money from foundations and community members to be able to help with that process of paying for the rehab. So now just to touch a little bit on dealing with the land banks. So you all in all different areas of Missouri have different experiences. My familiarity is with the Kansas City, Missouri land bank. I think the whole land bank thing is very interesting because in Missouri, there are actually two banks. There's the Homesteading Authority, which used to get the properties from tax sales or individuals who hadn't paid their mortgages and the houses were repossessed. In 2012, they created the land bank. And I think it was supposed to be like a new and improved homestead authority. I'm not 100% sure exactly what their intention was or how they were planning to do things different, but there are still a fair amount of challenges. So typically those lots that we're purchasing from the land bank have multiple liens against them. We are one of the first nonprofits in Kansas City, Missouri that is actually building new homes on properties in a economically depressed neighborhood in the last 20 years. So it's not an easy process. When we acquired these four land bank lots, two of them had demolition liens. So there had been homes on them and the homes had been demolished, and then they put a lien against the property for the cost of the demolition lien. So we would have paid that if I wasn't able to get that demolition lien removed. They're typically back taxes. Sometimes they're back contractors' liens. There can be back water bills. And again, the land bank does nothing to help the community land trust clear off those liens, pay those liens. And obviously those are encumbrances on the title. And so we're not able to purchase the land or get the property and sell it to a community land trust homeowner without cleaning those liens off. Generally, it is hard on those abandoned properties or the vacant lots to get absolutely everything clear. So we typically use a title insurance that will allow for about a 97% clean title. There are only a couple of companies in town that offer that, and you pay for it. So that's another cost to the community land trust. The land bank is supposed to have a list of the appraised value of all of their properties. Frequently, there are properties that are missing, they're not on the list, or they'll be stated as one price that is clearly out of line with others in the neighborhood, and it just hasn't been appraised correctly. Sometimes the land bank will make decisions in the meeting when they're trying to communicate with a potential buyer and say, oh, this is priced way too high. We should cut the price, just randomly. So that also makes the process of purchasing a land bank lot a little more challenging. I sit in on the land bank meetings every month, and there are multiple parties trying to get those land bank properties. And they all have different reasons for their purchases. Parking lots for a church in the neighborhood. We'd like to it's next to our house and we want to assume that land and use it for recreation. We want to put a garden. And, all of that is lovely, except if that lot could be used for a home, that could potentially be a more important value to the neighborhood than some of the other purposes. At this time, the Kansas City Land Bank does not have any discretion or prioritizing about what the purpose is for purchasing a land bank lot. Obtaining the option to purchase is slow. Often you have to go to 3 or 4 land bank meetings before your request will actually be heard. Sometimes it's continued or held. There are some lots that we've been trying to purchase since November of 2021 that still we have no decision on. Once you actually get the option to purchase, then actually executing the contract is also very tedious because the city has to agree to all the parameters, and there's no like you do fill out a standard form, but it's not a very standardized process. There's a lot of kind of jumping through hoops that can seem somewhat arbitrary. Now, what I want to share is, conversely, Wyandotte County has a land bank, and they have really done a lot of work to try to determine how could we make it easier for individuals or nonprofits to purchase these properties and put them back into use with a home. So they have a preference for if the nonprofit or the individual or organization is planning to build, they get first choice. They've reduced the purchase price to $1. So the whole appraisal and what the price is removed. They have tried to reduce some of the fees that the individual or nonprofit has to incur in order to get that property up and running. They also are offering a property tax rebate, and they have created some very specific home plans for narrow lots. So I bring this up mostly just to say, big differences between those two. And everywhere in Missouri and really everywhere across the country has their own policies. I applaud what Wyandotte County is doing because I think
Megan, that's really helpful. We have a working group with our Affordable Housing Coalition working on community land banks, establishing them across Missouri, and then like writing some recommendations about best practices. And so I will make sure that that group gets this slideshow, and I'm also sure that I believe Amber was with us. Amber Smith from our affordable housing work will probably be very likely to follow up. I love all of your presentation. I did want to just make a quick time note that it's 12:52.
yes. So
we're done at 1
please,
o'clock. There
let's
is
answer
one
questions.
question in the chat. So go on and do what you need, and then we'll get to the question.
No, well, this is just I took this graphic from an article in the Center for Community Press. Basically, this is how it could work, how those two parties, the land bank and the community land trust, could work well together. So happy to entertain questions.
Yeah, that's the ideal, right? We want them to all work together. We want them to foster whatever the community thinks is most needed in those areas.
Exactly.
And making sure that they have that heavy voice. I appreciate the way your board is structured. I think that that's really important so that those groups can be heard there. So there was a question from Hannah in the chat that asked the income limits for participation in the program. Are they set by the individual CLT, or is that something that is established at state policy, et cetera? What is that?
It is, we have chosen to go by the HUD income guidelines. I would say probably 90% of the community land trusts that I interact with use the HUD income guidelines, but you can use something else. It all depends on also like where you've gotten your dollars from. So those 4 land bank lots that we're building new homes on right now, we have CDBG funds. So that would basically tell us we have to use the HUD limits.
Yeah.
So you have a little more flexibility if you have your own dollars.
Yeah. I think that question in my brain anyway is also connected to an earlier question that asked like why you would describe it as workforce housing. Why are most of your buyers like workforce level? I think many of us in housing policy might have different answers to that. And so there was an answer in the chat, but I'm from Springfield, but I'm also curious like what your answer is then.
In terms of like that people aren't making this much money, or that?
Yeah. For me, that's really connected to HUD's AMI being so significantly higher than the community service, the American Community Survey AMI.
Yes.
So for folks outside of the policy space, like HUD's AMI is way, way higher than what the actual AMI of what people are actually earning really looks like. And that's like adjusted for housing costs. And that is what ends up like pricing. It makes right, the CLT homes have to be geared towards families that are working and not families that are actually extremely low income. They're working minimum wage jobs, right? These are higher wage earning households, by requirement, because 50% of AMI for HUD looks really different than ACS's 50%.
And so in that space, Sarah, the community land trust can reduce the level that they allow. And one way that they might do that would be to say, we're not taking the area median income of Kansas City, Missouri. We're taking the area median income of the census tract in which we're building these homes.
Yeah.
And we're reducing from that AMI.
Yeah. I think that, so part of like HUD's calculation includes a really broad footprint, right? All the way out to Eastern Jack, for those of us in KC area, all the way out to Eastern Jack, which is much higher earning, and then all the way to like Johnson County, which is much higher earning. And so the ACS AMI for Kansas City is actually like 59,000. That's 100%, right? $60,000 a year. And so then, 50% of that is in the $30,000 range. It's just the way they calculate those incomes. That really makes it difficult for lower wage earning and households that are out of the workforce. And so these are really good. There is still not housing available though for folks at that income.
Oh yeah,
right?
absolutely.
And that's Yeah.
Now, I will call everyone's attention just to this eligible buyer, that the
Mhm.
board does approve the buyer. So again, I mentioned if there are multiple buyers who all qualify, the board is trying to choose the individual with the lowest AMI. They
Mhm.
are looking to award that house basically to the person who needs it the most.
Yeah.
So
Yeah.
that's
Yeah.
one of the criteria in the
Um,
eligible buyer requirements.
Yeah, that's really good, Megan. I greatly appreciate that. It's a tough in the affordable housing space, right? It's tough to have those conversations because we still, like, the housing market still prices out households, like you said, who are making 60, 70, $80,000 a year, which 10 years ago felt like a really adequate income.
Right?
And it's
Exactly.
often not for first-time home buyers right now. If you didn't have family helping you make that down payment, or, you know, putting you into a home that you inherit, et cetera, it's really difficult for those households. And that does not come, you know, that then it's a different conversation for households who are making 30%, right? Very low income, minimum wage workers, even working full time, people with disabilities, you know, et cetera. So families with high
And
child
so
care
we're
costs.
trying to keep the reason that we get abandoned housing lawsuit houses or land banks lot is that it keeps the acquisition cost of the house down. Then we're trying to do things like get donations for the building materials to keep the cost of the house down.
Yeah.
So if we can keep that cost down, then we can sell it for even lower, meaning it's affordable for somebody who's making even less.
Yeah. Yeah. Very good. There is, since we have 2 minutes, I'm going to take my screen sharing back.
Absolutely.
And
Let me
share
stop.
our quick announcements here, and then we'll hang tight, hang out around. I don't really know if it shows you the chat box, if they're whatever. Anyway, some action items. Join one of our coalitions. We lead coalitions doing state level policy work around affordable housing, food security, criminal legal reform. Sign up for our newsletter, check out our weekly podcast. You can get caught up. You can check our bill tractors at Empower Missouri and find all the work that we're doing around anti-poverty policy across the state. I have linked our survey in the chat box. It will take you literally 2 minutes. It's very important for us for being able to continue to offer these forums in order to improve them, make them better, make sure we're responding to the things that you want to see and hear and learn about. And that is all my whole spiel. And then I want to just like quickly touch on this question around how housing trust funds can help with community land trusts. Megan, do you have an answer with that, or would you?
Yes. So I was just putting that in the chat.
Yeah. Oh, okay.
So
Perfect.
we did get a housing trust fund award grant. And so therefore that does allow us to say, all right, if we put that money into this house, we can take the price of the house way down. And therefore it would be affordable for somebody in that 30% AMI.
Yeah. Trust funds are so important and so useful because they are the most flexible pot of resources available for affordable housing, and can touch like all of those you know, income markers that we have sort of been discussing, because you know, there's needs across the board until you are at a pretty high income, unfortunately, particularly across the state of Missouri, for sure. Megan, thank you so much for your time.
Absolutely.
I really appreciate it. It was a super informative presentation. Love it so much. Could talk land trusts all the time. Very happy to have you join us. We appreciate it.
Absolutely. Thank you all.
Yeah, thank you all. Have a great day. I'm going to send you out.